The hard part about financial services data is it isn't linear. Trades don't add to positions. It depends on which tax law you're in. It depends on which venue you bought it in. It depends on which vehicle you bought it under. It's extraordinarily complex. So you really have a single control panel to discover all the data and fix all the data and use all the data. It's having material impact on the returns to investors. It has an enormous impact, its cost. And we figured if there's a way to tackle that, actually, not only can we do something that's really interesting, but it will have an enormous social impact.
Welcome to Investology. My name is George M. Ferris. I'm a reformed banker who used to sell derivatives, alternative investment, and other sophisticated products to institutional clients across Europe and Asia. But that doesn't mean I was recommending them to my friends and family. This is my channel to discover how to deliver better outcomes for investors through technology, innovation, or just common sense and critical thinking. I hope you enjoy this conversation.
How are you doing, George?
Very good. I'm very pleased to have you here on this 1st of May. So you're the CEO and co-founder of Finbourne, an investment data management fintech, and we'll try to understand what that means. And you've raised 55 million recently, a true European fintech success story. So as we record this on this particular date, which is the 50th anniversary of Vanguard, which is an inspiration of mine, and its founder, Bogle, was a champion of investors. And one of his things was trying to continuously reducing fees, which Vanguard still managed to do until now. I've seen in a recent podcast that you have a mission to reduce the cost of investing and drive greater efficiency across financial services.
Yeah.
So I'd like to start with that as a premise for the company. What inspired this mission and how did you go about it in Finbourne?
Yeah, so a lot of the founding team had the better part of 2 decades experience in financial services, which makes us a bit unusual. We're a bit old doing a startup, but it was almost exactly the same mission, right? You looked at it, and right now we're in a sort of fairly unique time where fee compression is happening, driven by folks like Vanguard with exactly the right outcomes in mind. The asset mix is getting more complex. So, everyone's in private markets, everybody is in direct lending, non-bank banking. And that becomes a very difficult challenge for most firms involved in financial services to manage and maintain their gross margins. Now, if you look at the fact that if you took the average UK person who retires and you looked at their fees in their 40s, it's about 1.8%. If you could make that 1%, they would be able to retire 4 years earlier, or they'd be 4 years better off in their retirement. So it has a very material impact to try and help that vision of reducing fees. So from a Vanguard point of view, they've had exactly the right vision for a very long time. But we're trying to create the technology so that everybody can end up delivering that same vision, so that everybody can have those reduced fees, but still have access to the diverse asset mix and the risk that they need to achieve those outcomes. Because one of the things is it's easy to create a very big factory of ETFs and say, right, this is how we're going to reduce fees. But actually that doesn't cover the entire spectrum of risk appetites or risk asks people have. So our vision was to how do you make that a bit wider and create the technology that not just we need, but everybody needs to be able to deliver on that lower fees, maintain the gross margins of all the participants involved in it, and get the ultimate social impact for the investor at the end.
Sure. And we're not going to talk about Vanguard all the time, but yes, it's actually, like you said, quite a typical case of economies of scale. But yes, now we're talking about technology and efficiency across the spectrum, not necessarily if you're having like trillions of dollars in asset under management. And so you hinted at that, but what are those typical challenges? If we take some of the clients you're serving, maybe you mentioned an ETF provider or asset manager. Can you kind of paint a picture of what it looks on their side? What are those data challenges?
So historically, if you look at how the world has evolved, if you trade fixed income, you typically have an order management system, you'll have an IBOR, you'll have an accounting system that is very specialized in fixed income. And then if you trade equity, you'll have another set of data. And that just the listed markets. And then if you trade real estate and private credit and private equity and infrastructure, and the list goes on and on. And before you know it, if you're delivering a wide fund range to your end customers, you have an infrastructure that's very hard to manage, very hard to get answers out of. And if you've got a client invested across a multitude of these different fund ranges, because they're all in individual silos, just trying to work out what their return is on a overall aggregate basis is extremely difficult. It's still a very manual process for most people, and it's extremely expensive to run. So how do you fix that problem? Right? That was basically what we looked at, and we tried to rip it all back, right back to the core ingredients of, well, actually, all these things are fundamentally at their core balances moving in and out of assets and liabilities somewhere on a balance sheet or somewhere in your accounts. And all the instruments you have fundamentally will pay you cash flows now or later. They'll go up and down in market value. So we tried to bring this down to a very sort of core fundamental language and then build translators. So rather than going, we have the universal language, try to approach it more from a Google Translate point of view. We will keep you having these 5 or 10 different systems, but we'll be able to make one of them look like it came from the other system or aggregate between them. So in order to get to the end state, you don't have to have a hugely expensive transformation program. That's the sort of core fundamentals of what we're trying to do. It's not just about, here, as you put it at the start, here's an ocean of data. What does it mean, right?
Mhm.
The hard part about financial services data isn't linear. Like trades don't add to positions. It depends on which tax law you're in. It depends on which venue you bought it in. It depends on which tax regime you bought it under. It depends on which vehicle you bought it under. It's extraordinarily complex. Even if you look at something like I bought 100 shares, I sold 50, I bought 25 more. That is a weirdly complicated set of data in financial services. Yields don't add together, trades don't add together. None of the data elements we have add together in a way that the data infrastructure we've built for the last several decades works. It's all linear. It's all SQL based. It's all assumes that the data is linear. And unfortunately, in financial services, it isn't. And that's why the efficiency hasn't quite worked out in the way that we thought it would.
So you're introducing to me this concept of nonlinear data, but if I imagine it, from a naive perspective, I can kind of see like, oh, everything's coming into my Bloomberg terminal, and well, then I have to ask my question about, okay, this is just the information that I see, but the trades, etc. I assume they go into another pipe, but the infrastructure. So that's kind of a very outsider point of view and from a distance. But now we're talking about not just data flow, but infrastructure, right? And we need a different infrastructure for different asset classes, jurisdictions, stuff like that. So that, and we'd say infrastructure, but it sounds like there's, well, multiple pieces of multiple pipe that form an infrastructure. Is that the traditional
Yeah,
model?
exactly that. And the venues and the infrastructure you trade on, but then there's the entire operating systems above it where you confirm your trades, where you account for them, where you manage the risk on them. And everything is very siloed the whole way from top to bottom. When somebody wants to go, what's this client's overall view across these 5 different pillars, it becomes a very, very difficult thing to do in the current way we build infrastructure. And we're trying to change that.
So what you're talking about is like, and you mentioned the core infrastructure, which is something that I hear for also different kind of industries, but that's what we're talking about. Is that what like Finbourne is trying to change? And the change, is it like replacing? Is it coming on top? How does that work?
It is both thing to explain to people. But imagine you have these 5 pipes and they're all speaking different languages. We sit in the middle and can translate them. And it is literally like Google Translate on your phone. This pipe is speaking fixed income and this pipe is speaking equities. Well, actually, how do you get an overall risk view for the two of them? Well, you can aggregate between them because we have translated them into the core language, and then you can re-aggregate. I haven't replaced any of it. I'm just sitting over this infrastructure. But for a lot of them, we can actually be the core books and records and valuation and risk infrastructure as well. So it's, but what's more interesting to us is you have a place where you can go and answer the questions that are at the minute extremely inefficient to answer.
Right. So if again, I try to be very specific and I'm looking at how I was trading when I was at Deutsche Bank, etc. And indeed, I was trading multi-assets and there would be different booking systems, etc. And
And I bet
but
you had a spreadsheet to add the risk together so you knew what your position was, right?
yeah, except I wasn't dealing with that. I was saying, okay, I've done the trade and good luck with it. But yes, okay, I can imagine there was a spreadsheet for if the client was looking for an aggregate position and kind of that it was all the different pipes. So that's where, like, so Finbourne, if I get it right, then it captures this whole workflow. Is that the right word? From the trade, from the data to the trade aggregation, and then it links kind of this typical front, back. So are you integrating between front, middle, back
Yeah. So
office?
we have, in order to do that activity or to be that aggregator, you have to be able to do all of that activity. So we have the engine that can do all of that activity, the front, middle, the back office, but it can do it and it's configuration driven in 5 different languages at the same time and actually aggregate between them. And that's the real magic, right? Because if I can replicate this system and it looks like that system, and I can replicate this language and it looks like that language, and then I can give somebody an aggregate view over the top of it by rebuilding the position so I can tell you what your returns are on an aggregate basis, then you have a chance of answering the hard questions. Like for some of our clients, what's my total risk or what's my total liquidity across my public markets and my private assets and my infrastructure? Because a lot of our asset owner clients, our pension fund clients, want to answer that problem. Like they want to know, I have given Vanguard this amount of money to manage, and I've given BlackRock this amount of money to manage, and
Yeah.
I've given KKR this amount of money to manage. What's my risk? Right? That's a very, very difficult question to answer right now. And we have a system that can do that. And because of the way we built it, there aren't any other systems out there that can. Most systems go about this as going, right, I've got a new model and I'm going to translate all those into my model. We've gone about it going, actually, we can configure our engine to understand all of those models and then re-aggregate them. And it's a slightly different way of operating, but it is literally akin to what Google Translate did when they did reinforced learning. There's a core language at the bottom of it, and the translation works regardless of what the new language is, as long as you've trained it sufficiently.
Yes. All right. So I understand. So what you mean is that Google Translate, it's not like it learned the grammar and the vocabulary of each country. It's trained to move from one to
It
another
literally
seamlessly,
builds,
right?
yeah, it builds maps between French and its
Mm.
core language and English and its core language, and then it can translate from English to French.
Yeah. But what you talk about languages, you talk about asset classes, jurisdiction, and also like the report from Vanguard, the report from.
It is exactly that. So we've built something where we've built a core fundamentals of this is how instrument identifiers work. This is how legal entities work. This is how core accounts work. And then we build the maps from every other language to that so that we can take one system and make it look like it came from a different one, or actually take two of them and re-aggregate them together to get you an overall position. It's an insight that was a very long time in the making, but when you have it, you're like, oh Christ, there's a very big impact on how you go about answering some of the most complicated questions in financial services.
Yeah. I want to go on and understand, how it works on the client side in terms of implementation and stuff like that. I have a few brokerage accounts like Hargreaves, Interactive Investors, etc. It's not like it's a very complex or big portfolio, but I did it for different reasons. I couldn't figure out, for example, how much assets, how much equity I have because I've got stocks and ETFs and mutual funds, and I want to know how much is equity. I found an app that does it, and it's called Get Queen. And for one broker, I could do it automatically. So it integrates. You say, okay, there's an API. But for the rest, I had to do it manually. And it's fine because it's my personal small portfolio. But God, it was so hard to be able to just know that. I don't know if that's relevant to the very complex world of pension fund, etc. But I can somehow relate to it and how you don't want to do it manually.
That's, in a nutshell, that's the problem we're trying to solve, right? So for eventually a personal investor, we might end up going there, but it's exactly that problem. Like now try and answer the same question, but take your pensions into account,
Yeah.
right? And then imagine you wanted to answer questions like, well, actually, how much US equity do I have exposure to, directly and indirectly through those pension assets I hold? So if I have a view on Trump tariffs, as an example, how would I cater for it? And the average end investor has no chance of doing it. And bizarrely, even some of the most sophisticated firms out there really struggle with that question because it is incredibly difficult to do because of that fact that everybody speaks a different language. And it is having a material impact on the cost of investing, right? It's having a material impact on the returns to investors. It has an enormous impact, this cost. And we figured if there's a way to tackle that, actually, not only can we do something that's really interesting problem to and a task to challenge, but it will have an enormous social impact if we do it well.
Now I understand better the problem and solution.
It's a difficult one to explain to people, even to our customers.
Let's go through that. So what I'm trying to do now, so I've got a lot of questions, but one of the things is it seems like it's a core change. And when I say core, it's like really the way they work through this front, middle, back office, etc. It seems to me like it would be a fundamental change for any company that's implementing it. So I'd like to understand how they do it, and do they do it at, let's say, the company level, department level?
If we go further in your analogy, imagine you could up with an infrastructure where all of those feeds became automatic, right? And
Yes,
you went,
I've
here,
heard that.
yes. Number one, here's account number 5 or 6. Okay, press play. Now I can answer the interesting questions. The fact that at the same time it can also do what some of the underlying systems that you're getting your Hargreaves Lansdown from isn't really the important question, is it? Like, that becomes a cost question. It's maybe I could save some money by having 3 systems instead of 4. But really what you're after is, I want that risk, I want that whole view, I want to know where my equities are, I want to know if I'm indirectly exposed to US equities or Russian equities or whatever, because that question changes over time. That's the problem we're trying to answer for customers. But if you had that application that could point at each of those accounts and automatically do it, what's the cost of change for you? It's none, right? It's very little. Like, it's as close to, you haven't changed, you haven't had to move away from, you haven't had to rebuild any of your infrastructure. So for a lot of our customers, we built the infrastructure so that the cost of change is low. Let's come in, let's figure out the answer to the complex questions, and then later we can worry about how we unify some of the infrastructure underneath it. But let's get you the answer your business needs first. And we try to take away the change risk while doing that. Because otherwise, you're right. Otherwise, we'd go in and say, let's rip the entire operating system out of your business that's been going for 40 years and hope it works. That would be, it just wouldn't work, right?
It's not a good pitch. Yeah. So, okay, so that's how you approach it. So maybe we can take, I don't know if we can ask you, got a case study about a wealth manager, and now they ask these questions, like you said, what's my risk and how do I move this button of US exposure, but across asset classes and instruments, etc.
Yeah.
So so that's what I want to do. At the moment, I have a spreadsheet, which is, well, it's a spreadsheet. It's imperfect. It's probably not feeding, etc. Or maybe something a bit better. I'm looking for a better solution. How do we, obviously I expect it's not like a day job, but how do we go about making that change? What's required from their side in terms of IT and time and stuff like that? And how do we seamlessly, because you said we're not going to rip off the existing infrastructure, but it seems still to me that we're changing the brain at some point, but maybe it's gradually. So can you detail that?
You absolutely are changing out the brain, but you start with changing the brain for the questions you need answers to. Somebody wants to get across those 3 systems, exactly like your analogy, and we'll sit over the top of them and go, right, now you can get the answer you wanted from this. That inevitably goes to, actually, well, now that I can get that answer here, I have another question, and I have another question, and eventually you end up taking over more and more of that infrastructure, but never for the sake of doing the work. It's always for the sake of, here's the next outcome I need, or here's the next answer we need as a question. The time to value is low. Now, the interesting thing about our platform, you talked about this, we have over 700 public APIs. We have thousands of examples on GitHub. Whenever we do anything with a customer, we don't write bespoke code for that customer. We solve the problem with the toolkit that we have, and we go, here is the answer. Your developers have access to it. You own the configuration. You own all of the changes we had to do to answer your question, so that you're not prisoner to our intellect or our knowledge or our professional services people. You have complete visibility on everything we did to get you that answer, and you can change it yourself if you want to. If you don't want to, we'll be here to help you. But if you do want to, you have complete control of it. Because that's the other thing that tends to happen is a lot of the sort of historical systems in this area are very closed. And you need to go to the firm who sold you the system to ask them to tell you
Yes, the classic.
it's vendor lock-in, right? And as well as saying, right, we wanted to help change the cost of investing, part of that is you can't be a prisoner to our commercials. You can't be a prisoner to our availability to help you. You have to be able to help yourself.
Got it. So it's not like one shift, it's like one question at a time or one problem at a time. And that's where you pull out those 700 APIs, but not all together,
Yes.
one by. So if I go back to the brain analogy, we're not like switching the brain. We're like, well, I'm not good enough in neurology, but anyway, we're plugging in. So maybe it's, and you marry many neural links that gradually can, whatever. Maybe over time they overtime all brain. But they can coexist.
So I describe it to people more like
yes,
Office 365, right? Office 365 has 900 different applications on it.
Right.
Most people come to it and they're like, oh, I want Word. And then they look at it and like, oh, I quite like Teams. Oh, right. Now I like Whiteboard. Oh, and when I have my meetings in Teams and I get my summaries, it can write a Word document for me. And then, oh, God, I've got a PowerPoint, and the Copilot can do that. And before you know it, it's sort of answering lots and lots of questions for you and extremely helpful. But when you came to it, you didn't go, oh, this thing has 700 different or, X hundred different API endpoints and 100 different applications. And you don't make a decision to buy it because you're not comparing it to anything else out there. There is nothing else out there that has that breadth of coverage. You're just going, I really wanted something to do email, or I wanted something to do Word documents, or I wanted something. And you just gradually use it more and more. And we've built to be that. Like, here is an entire infrastructure of things you can do, but let's first do this one, and then maybe this one. And then when there's a better solution, you can integrate it very easily.
Right. So I pick up, I pick Word and Excel, and then that's it. Yeah. But the Finbourne, and Microsoft has the whole well, Microsoft is particularly good at pushing it and getting it sticky. But that's where the reference maybe stops. I think I really understand the model. So we talk, and I'm influenced because I hear a lot of people in banking say, okay, we need to replace the core, and we're going to do it once, and then we're going to be ready for the future. But really, it's a different approach. It's solution driven. It's problem driven. It's about creating the solution.
Those things of we're going to replace the core and we're going to do it once, those are where careers go to die typically.
Yes.
And you've lived it, right? Here's a program, and 5 or 6 years in, people, or 2 or 3 years in, people rebase, and then 5 years in, people change the scope, and then somebody gets fired. Somebody then declares it a success, and the old infrastructure is still there for a very long time. And that's what we very much didn't want to do, right? We didn't want to go out and say, here is a new way of operating, but you have to replace the core. If you want to replace the core, absolutely, you can with our infrastructure, but replacing a core infrastructure and learning a new language at the same time is really difficult. Like, it's extremely difficult. And that's typically what those infrastructure changes are. Not only am I replacing the technology, but I'm also changing the language everybody speaks at the same time. And that's a really hard thing to do. It's why they end up being big transformation programs. And we built it going, imagine a world in which you could change the core, but keep the language, or not change the core and get the answers to the questions. Like, those are the things where it makes adoption much easier.
I want to also go to really how the tech works, but I'm still one more about this process, because it seems to me that then from the customer, so again, this wealth manager, asset manager point of view, their problem is a problem that they might ask a consultant to solve, right? It's like, how do I manage my risk, etc.
Yeah.
And therefore, how do you get into these conversations where do people necessarily think, oh, there must be a technological solution there?
No.
or does it go from a roundabout way?
So at the minute, most people come to us going, I've heard you do something cool. Can you tell me what it is? The explanation of what we do has been something we've struggled with as a firm. So we're in a very fortunate position where in all the major segments we try and go after, we have very tier one clients. But honestly, they've come to us by somebody else going, you should have a look at this thing, rather than us being very clear as to what we do. Because even given this conversation, it is a difficult premise to explain to people that we can do everything your systems do now, but we don't need you to change anything. What does that mean exactly? Like it has been historically a difficult thing to explain.
It's very interesting. And I was coming in with a few assumptions based on previous conversation, etc. And now it's very clear to me, but it's radically changed the way I was preparing for this.
But it's the old, we're driven by very much the Simon Sinek view of things, right? Like it's people don't buy what you do, they buy why you do it. And it's very aligned to what you said Vanguard are doing. Then it is what we do, and then it's how we do it. But the problem is that people aren't used to that, right? And that right now, most people are used to consuming stuff going, I need this point solution, and here are my three options. Whereas we're trying to approach it from the other way around, which is, you know, why we're doing this is very important, and what that means for you as a specific type of client, and then how we do it is sort of secondary. And really, how you're going to do it is going to drive how we do it, because every customer we get to at a large enough scale is so unique. They've made 30 years of decisions, none of them bad decisions typically, but it means that they've all ended up in slightly different places. So there isn't let's just rinse and repeat. There's a sort of balance in that. They expect us to come with, if you're trading mortgage-backed securities in this region, this is how they work. If you're trading inflation derivatives in this region, this is how they work. And we have to have that level of expertise and the best practice recommendation. But sometimes, even if we have the best practice recommendation, a customer can't get to it in one step. They have to go, okay, I need to replicate what I have now, then I need to make a change, and then we can get to where best practice looks like. But I can't do that at once because I don't want to rock up tomorrow and all of my end customers' risk has changed.
No, I understand. This is also what this podcast is about. It's about discovering those solutions that help bring better outcomes and how they can be implemented broadly. You're a good example of that. So I understand how it works now. That's the problem. I understand how the solution works. I just want to touch on, maybe very brief, on what you built. So those 700 APIs, what is it that you have to go through in order to do this?
So we started with the core consideration that everybody does the wrong way around in financial services is identity and access management. So we built an entire library of how do I protect my data. So by default, you can't see anything, but now you're allowed to see all of the portfolios and the transactions in them, except this one, because I've put it behind a Chinese wall. And not if you're on this device, or not if you're in this location, or only when it's a rainy Wednesday on it. So those considerations of what you're allowed to see. And if I look at that from a retail advisor, right, you have an advisor and their name is Joe, and Joe's out this week and Jane is going to be your advisor for this week. Well, you need an entitlement system that says Jane is allowed to see your portfolio, but only for this week. So we built that first. That was literally the first part of the system. We went, how do we protect data? And then we said, right, next thing we need to build is instrument representation, accounting, aggregation, compliance, all the stuff that's needed to do the front, middle, and back office activities at a financial firm, right? And we built a platform, we call it Lucid, for that. And that platform, we built it as a translation engine, so entirely configuration driven. So you can configure 5 or 6 different languages in it. You can cross-reference security identifiers. You can translate terms and conditions. You can translate accounting codes, and you can aggregate all that non-linear data together. And then we built a data network, so a data virtualization engine that is connected to Salesforce and Snowflake and your cloud infrastructure and your market and reference data vendors, so that you have one place to go and get data from anywhere and put it into our system, or take it out of our system and send it to anywhere. And in that way, we have an ecosystem that is connected to everything, that can do any business process. And in that way, we can replace any part of your infrastructure with some or all of that and the entitlements and security that you need. We're now taking that into the AI space, because one of the issues we have in financial services and using AI is that core data privacy, right? I can't put all of my transactions and positions and holdings into an AI model because somebody else asks a question of it and they're going to see what my view
Yes.
on the world is. Whereas we built something that says, here is a data network that knows how to answer that question. Now here's an AI assistant over the top of it that knows how to ask the question. And we've looked at it that way. So your context remains throughout the entire network, and you can get all the benefits of an AI without the risk of data loss or the risk of data leakage that usually prevents financial services firms from using.
Yeah. Okay, that was my next question, and I'm going to dig further. But just to also clarify, you talked about Lucid. I saw as well EDM Plus. Is that the data?
That is a combination of Lucid and Luminous, which is our data
okay.
the enterprise data management problems that people have. So we have a data network connected to everything, somewhere that knows what all of the entities mean, and then a workflow system that knows how to manage all of the outliers and exceptions over the top of it. And we package that together and go, that solves your problem of bringing in enterprise data and mastering it and making sure that it's correct and fit for purpose for people to use. So
All right.
EDM Plus isn't the thing. It's
Got it.
these components together solve that problem.
And the AI question is obviously on everyone's mind in
Yeah.
financial markets. I was at Finovate. Every single startup had something AI, and I can see how there's many flavors of it. So one of the questions, what you've already answered about security and configuration, but I also want to understand this data virtualization, where I nodded to sound intelligent, but what does it mean, data virtualization?
You hear the terms data lineage, data catalog, data governance, all this sort of stuff. For us, one of the key answers to that is data virtualization. So that ability to say, here is a catalog of everything that I am entitled to see. So
Got it.
it's a view over Snowflake and Salesforce and cloud infrastructure and Bloomberg and literally everything that I am entitled to see in one place. And when I build reports or I build products that I want to use, so I want my customer name and the current holdings that they have and the market value of those holdings, and just that is across 3 different systems. We have a network where we can build that product very easily. And actually, we then know how it's built. So we're like, if somebody were to change the meaning of one of these products, we could tell you who's impacted and we could tell you who's consuming your data. And we can read from any of those locations and also write to them. So when I bring data in and I look at it and I realize there's an exception in it that needs to be fixed, I can create tasks in a workflow engine where when I fix those tasks, they will write it back to the underlying operating systems. So you really have a single control panel to discover all the data and fix all the data and use all the data, not just in your building, but literally everywhere that you have permissions to. So I'll go back to, that's why we built the permissions engine first.
Yeah, well, you've built a lot of things.
Yes, we have, yeah.
I can see how these 55 million were first required and put to good use. That's really quite impressive when I hear about it. And just to finish on this AI, okay, I understand. So now you got proper, you got proper management of your data, and you see yourself as what, an enabler of AI done more securely for financial firms? Is that how?
Exactly that, yeah. It's exactly.
Okay.
So we have built a product or a facility or a toolkit that allows you to ask questions and decide how those questions will be answered. I want to ask what the value of my fund is. Well, actually, that should go here in the data network, and it should ask a question that looks like this. So we use generator guidance to tell you the shape of the question and what the acceptable responses are. So if I ask this model, it's only allowed to answer yes or no. That's where we use generator guidance. And then we obviously use RAG to reinforce and tell us where is best to answer those questions or the format to ask them in. Then we give you a mechanism that says, actually, if I just want to talk to a Wookiee, go to OpenAI because it's probably the thing that will answer the question in the best way. So we give you the ability to make that, to build that decision tree, and then the ability to put guidance over the top of the model so they answer the questions in a secure way. And then we trace and log and audit every question asked, who asked it, take the answers from the model and execute the things they tell us to execute, and then keep a history of everything it executed so that you can sit there. And if a regulator came to you and said, somebody was accessing your model and they asked this question and you gave them this answer, you have explainability of exactly why that happened, and reproducibility of the fact that it happened, and security that it executed in their context, so it only used the stuff they're permissioned to do. So
yes, the regulatory question, I think an essential one, which we should touch upon, an essential part of data and financial management, of the data burden that also become.
Somebody is going to knock on your door and say, you gave somebody this answer. Why did you give them that answer? And that's another place where people spend a lot of time and money. And as I go back to the why, we're about the efficiency. So we'd like to take that effort away.
My last question, but I think it's a very important one today. And we started with Vanguard, and they've signed up a partnership with Blackstone, and it seems to be everywhere I look. It's this news of the merging of private and public assets, and therefore the merger of private and public data.
Yeah.
And there's the challenge here, what I see is that private data might have a very different characteristics. How do you approach this?
So there's two ways to approach it. One of them is that it is still fundamentally an asset that you own that has a value that will pay you cash flows at some point in the future. And that's the first thing we do in our system. We're like, these things are in private debt, are a pool of loans. In infrastructure, they're a pool of assets. In private equity, they're a pool of underlying companies. How do you represent what's in that asset? How do you represent the cash flows that are going to come from it? How do you represent the investors that subscribed in and out of it? And how do you build that together? And that is no different to a bond portfolio or an equity portfolio that's going to pay me dividends. So from the core economics of it, everyone's always looked at them as entirely different, but they're the same. They are an asset. They have a price. They will pay cash flows. They will do it at some point in the future. And you need to manage that risk in pretty much the same way. They have very different liquidity characteristics. I can't get out of my private markets fund tomorrow. So it has important considerations from that point of view. And then the other thing is they have very different levels of opacity on the information available about them. So I'm not sure I can tell the performance of some of the underlying assets in it.
Mm-hmm.
But actually, I'm not sure how much better or worse that is than reading the modified gap standards that some of the biggest companies in the world produce at the end of the year. I don't know how much you try to read an end of year report from a public traded company. It's not exactly clear either, right? So the differences are less than people think when you understand the core fundamentals of it. Like, even when I trade an equity, people think that's the representation of the company. It absolutely isn't, right? It's the representation of a specific share class listed on a specific venue with specific reporting characteristics associated to it, and it does not represent the company in its entirety. There could be preference share classes above it. There could be bonds issued in another location. It isn't the totality of that company. And then people look at private markets and they go, hang on, I've got a Series A share class or I've got a Series B share class. What is the difference between that and the preference shares and the ordinary shares and the bonds issued? There isn't really a lot of difference from that point of view, but there is a huge amount of difference as to the liquidity, the rate at which you can get out of a given asset, the time frame that people invest over, and the return profile that it typically gives you because you are taking more risk. Now, people think the risk they're taking is on the manager. It's actually on the liquidity more than anything else.
Yeah, eventually that's always where you have to materialize it.
Yeah.
So that was brilliant. And you just opened up a whole new universe that could deserve a whole different conversation. But I also think this merging of private and public will bring a lot more questions because people will have even more challenges in where am I, where's my risk? Basically, data has another level of complexity, which I've been marveling at what you've built and how you can address all that. So this has been really a masterclass in how you can manage it. So I just want to say thank you so much for enlightening us, and all the best for you and the team at Finbourne.
Thank you very much.